Alrighty guys, welcome to the London session recap for Thursday the 7th of April 2022. So daily, obviously very bearish. We had a reaction from demand, we had a nice corrective pullback up to premium supply, in which we then had quite a sharp sell-off from there, right? Breaking this low here, and now we are expecting this weak daily low to go. On the 4-hour chart, you can see, right, we mitigated that buy to sell range, and we have literally just been dropping, right? Demand has had zero chance, especially once we broke through this demand chain, continuing to sell off. Last day or so, we have started to have a little bit of a pause in price action, a bit of sideways movement. If we look left on the 4-hour chart, there's obviously demand within here, right? Demand pressures coming here to push price up. We know that it's a bit of a, it's a demand range. But in terms of pinpointing an actual unmitigated single candle, right? This demand, after it was created, was then mitigated here. And then again, this came back down and wick mitigated that. So there's nothing really that clear on the 4-hour chart for me until we come down to this wick here, right? In which I expect price to either pause and then smash through, or maybe we'll get a bit of a pullback, who knows, because it is the extremity of the range. But until we take out that swing low, that's when I'll be expecting a bit more of a move. But in terms of the actual London session, we're having a bit of a sideways price action. Ideally, price would have pulled back up towards where supply flipped the demand chain right here. That's obviously going to be nice and high probability. We have 4-hour supply to work with to then target lower. But of course, it doesn't have to pull back that far, especially when momentum is strong. So overall, heavily bearish on the 4-hour and the daily. Let's use the 15-minute. Try not to sneeze. 1 second. Sorry, I think that's gone. Cool. So yeah, don't know why it's getting rid of, hang on, I have to do that thing where it doesn't like me to go on the M15 on that window, but it doesn't mind if I do it here for whatever reason. And now my pretty little blue circle has reappeared. So anyway, cool. So daily 4-hour, heavily bearish, right? We think that the daily pullback has likely done its job because it had pulled back up to the premium daily supply. So now kind of everything else is, if you think about it, what's it trying to do? It's trying to work its way down towards that weak daily low. The M15, for me at least, is in this larger swing range, okay? Price had pulled back up to the premium, so this is the EQ of the range, right? Price has pulled back up above it and mitigated this premium supply zone, right, which had flipped an old demand zone. We had a pretty strong, overall V-shaped reaction from that, okay? Taking out this minor low here, we kind of look at the sort of larger internal swings of price, okay? It's not quite, it's not the same price action in which we look at for CHOQ, where we're really zooming in and looking at each candle. This is kind of, what I kind of tend to refer to as sort of, I guess, minor price action. Those kind of internal swings, right? Not the actual true swing structure, but those minor swings in price, right? Within the swing high and the swing low. And you can see that once we mitigate that supply, it pretty much led to that movement there, right? Taking out this minor piece of structure here, okay? So yes, this movement did fail to take out the swing low, right? So technically this is not, it's not a strong high, right? For me, I try to keep the definition of strong and weak highs reasonably simple, right? And for me, a high is not strong until it takes out swing structure. So I did have a question, obviously price coming back up to here then today, we're trading from a weak high. Yes, because it didn't take out the swing low, but overall, you have to kind of look at the overall confluence, right, and use a little bit of nuance here. We've got this premium supply chain, okay? This movement did lead to the break of this low. So we always have that kind of bullish internal price action, and then it leads to price then kind of, I guess switching bearish overall with the internal price action, and then prices coming back up into here. So yeah, although it's not the strongest high in the world, for me, it's still one that can be worth trading from. Especially when we look at our next main confluence, which is supply and demand. For me, overall supply is in control. We have this nice premium supply chain. And even that, right, if you box off this price action and you just view it as a sideways range, right, what do we know about ranges? Sticking to the extremes is always going to be the highest probability, right? But ideally, we still want to be concentrating on those pro-trend moves, okay? Because this is the extreme, this demand down here, but this is super weak structure, okay? Because obviously the trend overall is bearish. Okay, so that's why it explains, why price sold off from here and why I was happy to look for short entries from within here. During London, price was actually somewhere around here, and at this point price was trading between sort of this big volatile candle that we had during the FOMC minutes being released. So price was trading between that high and this high here, and yes, you can trade the price action within here. For me, it has quite a low edge. You could potentially trade the bullish order flow, right, the corrective order flow during Asia, right? You could potentially even got a quick long there, sort of pre-Frankfurt. For me, it's not worth the risk for me, right? Are you going to take those kind of trades, risking 10 grand a trade, 20 grand a trade? Me personally, no. So if you're not going to do it on a small account, try not to build those habits now and try to think always what would you be doing on a sizable account, right? So once we then broke out of that sort of internal range and we broke this high, then I wanted to see, is this supply zone going to hold? Or considering we've already had a mitigation, is it quite weak now and are we going to make our way up to here? Well, the price action on the M1 kind of told us pretty quickly, it's probably likely that we're going to get at least a tradable reaction from here, right? Because we saw that aggressive movement in and an aggressive movement back out. Now, before I look at the M1, I was still not really in love with it. Okay, one, we've already had that mitigation. It wasn't the cleanest of price action overall, and the most safest thing to look for, right, if you want to then look for the shorts, is to wait for that M15 shock, right, that being the last internal pullback, right, and then you look for that to go. You're also then looking for that M15 demand to fail as well, because obviously you've got this bullish order flow, right, price coming back into this range. Then you have this demand range here, right? Price comes in and mitigates that and continues up. So then this would be this next demand range. So the safest thing is to do is, yes, wait for the M15 chock and wait for this demand zone to fail, right? But the downside to waiting for more confirmation and for waiting for more, the stars to align in your favor is that you're not always going to get an entry. That's okay. You just have to accept that to have kind of more things on your side, you're not always going to get in. And that's just part and parcel with how aggressive or conservative you are. So for me personally, I did want to see that, but with the overall price action, I was still happy to get involved because you're trading a strong reaction from the top of this range. Risk to reward to the bottom of the range is decent, and of course, for those who like to swing, hold your trades past swing structure, you have all of that potential down towards the daily low. Okay, and obviously the dollar is pretty damn strong overall when you look at all of this, right? Look at this. That means a lot. Let's just keep selling until something starts to drastically change. Okay, so in terms of the M1 price action, it's not the cleanest at all in terms of looking to get in. So let's do a bit of bar replay here, and I'll kind of show you, I've tried to do that in the markups as well, I'll kind of show you, one, how I viewed it live, and then two, with the benefit of hindsight, ways in which make logical sense. And why have all my drawings disappeared? There we go. Cool. With the benefit of hindsight, of kind of how you can logically make sense of how to get involved, of course, still within the realms of within our trade plan, right? So at this point, we've had a beautiful reaction. As soon as this happened, I didn't initially have this drawn on, but whenever I see something like that, to give me a bit more confidence, to see if it makes sense, I'll go and investigate, what did we come off? And that's when I quickly saw this, okay? We had this nice, decent supply chain, coming off this extreme wick here, nice bit of inducement with this little pullback, okay? That makes decent sense why we're having such an aggressive movement away. Okay, cool. So next thing, what do I want to look for? I want to look for our M1 shock, this being the nearest low. We then also have M1 demand here, right? So then price comes into the demand. Does it react? Does it hold back? Yes, price pulls back. So that validates this as a potential demand level. What is demand's job to do? Demand's job is to go on and put on a higher high. So what we're waiting for is one, demand to flip to supply, but also I need to see that M1 shock, right? I need to see a shock on the time frame that I'm entering on. So at this point, I'm just chilling. I don't know what the price is going to do. It's all pretty volatile. Still not in super love with it. I'm kind of debating in my head, do I want to wait for the M15 shock or not? Let's see if I can get a clean entry on the M1. So nothing's happening, waiting for the shock. And then we get the shock, okay? So at this point we get the shock. Just said that twice in a row, but hey ho. So where am I going to enter? Well, kind of two levels. Well, a few. We've kind of got this massive wick. I personally hate big volatile candles like that. I typically just tend to leave them alone, right? So what I'm saying is, price was to come up here. Yes, that's a valid extreme entry, but when it's so big, like this, I don't just want to kind of put like a 2 pip stop loss like this, I just tend to find they don't really play out that well. So I either leave them alone, or I would wait for price to come back in and then give us another confirmation entry, something like that. So yeah, whenever I see big wicks, not a big fan of them whatsoever, like big volatile ones like that. Obviously there's this level as well, but it's kind of pretty random, especially when you've got an unmitigated extreme behind it. It didn't react from anything, so I wouldn't be that keen on that. If anything, if you were going to trade from it, again, trade the reaction from it, or that's at least the way I would do things if price came up there. Okay, so let's look at the flip then. So it did sweep liquidity, which is good, which then gives us a stronger indication that price isn't going to want to come from the extreme because it's already grabbed some liquidity. This is the reaction from demand. Okay, so what you do to know that demand has flipped to supply is you wait for price to close below it, right? So as we can see, price has not yet done that. So we have the chart, but we don't yet have a close below. So actually demand has not technically flipped to supply. Still hasn't. Okay, and now it has, right? So now we get the closure below. Okay, so where is the flip? Well, the flip is anywhere from the base of the reaction to the top of the reaction. Anywhere within that red box is technically where the supply came in to flip demand, right? Obviously that's quite a large box, so you can either just, well, depend on how you trade. Let's just keep things super simple and assume you trade the same way as me, then you would want to use a fixed 2 pip stop loss within there. But we can refine it a little bit further, right? We can look at the price action within this overall flip. Okay, so let's refine it a little bit more. Well, if we move it to the single candle, we can see that this one was clearly mitigated, right? So it's very, very unlikely that price is going to come all the way up here, right? Mitigate something within here and then continue down for me, right? That's a pretty solid mitigation, right? So then if we look at the next one here, this one to me made a lot more sense, right? Yes, I could see the price had come in, mitigated some of the orders and then continued selling off. So it was a concern in that, not that I don't want to trade from here, but in that the concern was more that there's a less chance that price may want to come back for it because it's already filled up some orders. So in this instance, then what you can do, of course, is then follow the mitigations, right? You can follow the next supply. So whether you take kind of that buy to sell range, or you have it refined to that candle there, right? That could be the next order that you may want to set your entry order on, and you view it as that way, okay? So let's leave that for now. Let's just kind of show you how I was viewing it. So then once we kind of saw this overall, this is when I started to see this momentum and sell off. For me, it was a reasonably clean flip. I was then happy to set my order on this pivot zone within the overall flip, right? If that makes sense, okay? So I have my order set like this. And then price started to continue to do its thing. So we all now know, especially if you see my markups, right? I didn't get tagged in on this. So what I'm going to now do is delete this from the charts, just because you guys know how I viewed it. But I did leave my order on here, basically until pretty much we then got that shock and started to sell off. At that point, I then set my order in here, which we'll talk about in a minute, okay? So that's basically how I viewed it. But let's now dig into this price action and kind of view another way now with the benefit of hindsight and how some of you guys viewed it. Is like this, right? So price has mitigated this level, price is now down here. So if you want to follow the mitigations and you want to get in, where's the next level you can look at? You can look at this level here. So let's say you set an entry order in here, fixed 2 pip stop loss. Okay, boom, there you go. So now price comes in, is it going to tag you in? Sweeps the high and then sells off, okay? So that would not be a tag. If you had taken the sort of buy to sell range, right? This being that supply range, the price comes down, right, it pulls up and then it goes down, so that range there, right, you guys can see that's why it's a supply range. Then you may have been tagged in, but 2 pip stop loss, actually, yeah, you probably, if you had to lift it on, would have just been tagged in. Depending on how tight you were, you may have got tagged in there, right? So that's a potential and valid entry. Bit more aggressive, it depends on how much you love the overall price action at this point, but for me, that is a valid trade now with the benefit of hindsight, okay? Just a little bit more aggressive, and you're always just trying to follow the mitigations and get in at this point. Even though overall, yes, it is reasonably corrective, these can work. I've seen these work out plenty of times, and today's a great example. So that's your first sort of entry in which you probably could have got tagged in with a 2 pip stop loss, depending on how tight you had your stop behind the high. Okay, boom. That's one trade. Let's say then you're not in. You can see this level's been mitigated, and again you want to follow the mitigations. This level's swept liquidity. It's broken and closed below this low. Okay, so this would be valid supply. So you can either again take that whole buy to sell range, set your entry order somewhere within here, or you could refine it a little bit more to that wick, right? The thing I was kind of looking at this and I didn't really like about it was that if we draw a line from the left, right, it didn't react to anything here. So for me, it wasn't a flip, but it is valid supply, right? Because it's just a continuation of the move and it's broken this low. Okay, so this is another level in which you could set an entry on, right? Especially if you refine it to the wick. Let's see, then you would have been tagged in, right? And then that's another potential entry. Again, we get a sweep of liquidity. So this is good, right? We have continuous sweeps of liquidity, continual breaks of the internal low, and we're following that supply chain, right? Now at this point, so this is another one I missed in a moment, but if we have this single candle demand, right? Price comes in, it reacts, and then when do we get the failed reaction? Here, right? We get a break and close below. So now this is your flip, right? Because we react from demand, we failed to put in a higher high, price then breaks and closes below the reaction. So anywhere from the base of the reaction, right here, from where the initial reaction starts, drag it across to the top of the reaction, anywhere within that box is your demand to supply flip, right? So you can enter anywhere within there, or let's just try and keep things clean a little bit, and we can draw on it on this single candle, right? Again, following the supply chain, nice sweeps from here. Now you have a true flip, okay? So it gives even more confidence to it. And then again, if you use a fixed 2 pip stop loss, let's see if you get tagged in on this one. It's boom, then you'd be in the trade, right? And that's the third potential entry, okay? And now we get the M15 chalk. So M15 demand has now failed, right? So now you have a lot of confidence to now looking for shorts. So at this point, this is when I cancelled my initial order up here. So I was looking at all of this, but to me in the moment, it's just all a bit choppy and corrective. I wasn't in love with it. I was kind of, I'll leave my order on here, or I'll see what happens if we get the M15 chalk. So at this point, I can't remember exactly when I cancelled my order, but this is, yeah, about now. I think I cancelled my order. And then this is where I then basically had all of this drawn on. So I was like, right, it's pretty likely we're probably going to start to dump now because we've cleared the M15 demand. So let's see where the next sort of level following the supply chain would be this level here. But with this momentum, I kind of didn't really think I was going to get tagged anyway, but I was kind of hoping what I would quickly get is a quick pullback here, right? Tag in and then drop. Because what can happen, not always, but what can happen is if you have kind of like this entry, when you've got all of these mitigations and then we go, it usually dumps off, or it will dump off quite a lot, you know, mitigate some M15 demand over here, and then you'll start to see kind of a bigger pullback, because you have to imagine, what is the M15, one price is down here, what is the M15 going to look like? Well, it's going to be an M15 chalk, and then you'll have a big M15 supply zone up here that caused the chalk. So I don't really want to kind of just leave my entry here on the M1. This is assuming we've had a big sell-off at this point. That's typically when I'll just cancel my orders or reassess. I'll wait for price to come back up into that M15 supply, right? And then again, look for our standard entry model and then resell. Okay, but that's not always going to happen. So in this instance, I was hoping for a quick pullback, and then I think price just shit the bed and sold off. But at this point, order's gone. Cancel my order at this point, right? That for me is not a valid entry. Yes, it's just a continuation of supply, but 9 times out of 10, you're going to get burned if you kind of take those simple entries. At least that's what I found, right? You don't have to listen to me. Go and test these. If you momentum's super strong, perhaps it's worth being super aggressive and just trying to get in. But for me, that's just not a valid entry at all. So that's how I viewed price action sort of in the moment, and then also now with the benefit of hindsight. It's always kind of easy to say when you look back and you see price absolutely tank off, and you could have made 10, 20, 30 or whatever. Oh, should I get in? I should have just got in. There is an element to that, because once you see that clear high time frame mitigation, right? It's pro trend. It's from the premium supply chain, and it's at the start of the move. Part of my philosophy is you almost want an excuse to almost get in with price action. I don't feel like a good kind of mentor saying that, because I do feel you should be very, very strict with your entry models on average. But sometimes when you've seen kind of everything you need to see, right, this supply clearly looked like it was holding, right? Big money stepped in to do this, right? That is an overwhelming imbalance between supply and demand to do this. It's at the very, very start of the move. Sometimes you do just need to get in, right, and try and capitalize on that move. So I was a little bit more fussy. I thought price might come back to this part of the flip here. But perhaps with the benefit of hindsight now, that counts as a decent mitigation, and you just want to start following this corrective supply chain at the time and just accept the risk that potentially price may come up higher before going, right? That's how I viewed it, and then price absolutely dumped at that point. I'm not interested in trying to kind of get involved in the middle of the range, really, personally. There's nothing there that meets my entry criteria, and like I said, I don't really want to be trying to buy from this demand here, right, which failed to break that high, and it's part of all these weak lows, right, because this is the swing structure. So now we've broken, let's see, did we get a closure below? So now we've had a break of structure. So where's our new swing high? It's the highest point that broke this low after this low was printed. So here, okay? So now we have a nice clean swing range to work with. and I'll be looking for price to ideally come up to premium supply. Will it do that? Will it not? Who knows? Momentum's pretty strong, but we are getting nearer and nearer to the bottom of that 4 hour and daily range. So, you know, price might be a little bit more corrective before it kind of takes out that daily low if it's going to do so. We do have some that wick demand and some M15 demand nested within that. So let's see, we do have this level here as well. Let's get rid of that, put on our premium and discounts, draw it over here and try and keep charts as clear as possible. Okay, so yeah, this zone's not quite in the premium, sort of the top of it's in the EQ. So, but yeah, it's definitely a valid POI. It led to a swing breaker structure. See where's the bottom of that. So it's essentially flipped this demand range here, right? So that for me is a valid flip. Didn't sweep any liquidity, no inducement, not quite in the premium, so not the highest probability of zones. I would much prefer price to come up to this extreme. And we do have this buy to sell wicks as well, but I'm not a massive fan of buy to sell zones in general, especially when they're very, very small, because obviously that's essentially just an M1 zone or an M5 zone, right? I'd much prefer these single candle pivots. So yeah, I would love it if we get a nice entry up here. Probably that would be tomorrow. Who knows? Let's see. But yeah, if you're a bit more aggressive, we may get a potential seller from here, which you can look for on the M1 to see if we can target these weak lows. Or some of you may potentially want to play the pullback if that's within your plan. There you go on the M15 shock. Let's draw a line here and see if we can. See if it's coming off anything. But yeah, personally, not really that bothered to try and play counter trend movements. Yeah, we're already coming off this demand chain. It's already been mitigated. So for me, these are the next 2 and 15 levels I'll be looking at kind of to play a pullback with a bit more confidence if you're into that. But let's see how we shape up for New York. Hopefully you guys took some value from that. Well done to those who caught the shorts. For those who didn't, doesn't matter, right? For me, it wasn't the most amazing price action on the M1 in the world. It was a little bit tricky to get involved, but yeah, there's always lessons to be learned. So let's see if we can take this forward into the next time we see similar price action from a decent higher time frame level. For those who are trading in New York, hope you guys have a good session, and I'll see you in the next one. Cheers, guys.